And welcome back, everyone. Today is June 19th, another edition of Buy or Sell What the Hell. I'm here with Alec and Brennan as usual. How are you, boys?
Yeah, hey guys.
Yeah, doing all
Yeah,
right.
I'm good. We I started off last episode talking global macro. Not a lot's changed. I'll just hit on crypto first, and then I guess we can talk the dollar things as we go. Um, but I think the cycle is what I really wanted to just touch on. Big picture, we've got two main kind of waves or benchmarks, as we call them, which are just turning points in time. So, we always teach the cycles. It's not about highs and lows around the cycles necessarily. A lot of times you have cycle inversion. It's more about kind of these are benchmarks where the trend can change. We're just trying to time up some of entries or exits around the different cycles. But Bitcoin has had a major one where it's had probably 13 of the last 14 daily cycles that produced turning points, which is just amazing. I haven't seen a market be that consistent cyclically in a long time. So it's in a nice kind of set into a nice rhythm already. And we're coming up on another turning point here, the 20th, 21st. And the last two turning points we had was a couple weeks ago around the 7th, and then we actually had another lower high on third week in May. And each one of those turns, we've had a lower high. So, Renan, you and I were just talking, just about the same thing that the market for the intermediate term keeps making lower highs, and we haven't changed that pattern yet. Even though we're bumping up big picture support, we're up against the big picture levels as far as the trend around 6,000 that we're really expecting the market to kind of hold. We still haven't broken out of this intermediate term weakness. What were your thoughts beyond all that?
I mean, it certainly doesn't add a truckload of confidence that we've kind of been in this in this trough for a little while. One of the things I always pay attention to when I am looking at start charts, charts technically, I like to see the volume when somebody's making, when a stock is making a higher high or a lower low, and how much participation is involved in that. I mean, it gives me a little bit of credence is the move valid, or is it lack of liquidity in the market. And
Great point.
you know
hmm
Uh,
Yeah, when you look at just the kind of overall confidence in the market cycle, we've been in the red for so long now. It's kind of a clear triple bottom, kind of lining up here too.
yeah, it is. It's trying. It's definitely trying. We have. I'm trying to get a feel for the sentiment too. I was just, Brennan, to your point, trying to bring up the volume on futures. And I don't know. I don't. It's tough to see the positioning outside of the futures market. I mean, it's so hard to tell what Asia's doing as far as on the cash market and all. Everybody's across all these different exchanges. The volume on, if you just look at the GDAX, the volume on Bitcoin looks pretty weak. I mean, it's kind of been that way all summer.
hmm
But nothing to your point, Brennan. I mean, when we made the low in February, I mean, we were trading probably, I'm just eyeballing it, 3 to 4 times the average daily volume,
mm.
and we're below the average. I mean, there's nothing to even look at.
Yeah,
That's just on
it really
GDAX.
feels like people they are in kind of a holding pattern. I have got an itchy trigger finger right now, and I really want to buy uh, these levels and still save enough powder to ride the move lower if it happens to continue to make lower highs.
Hmm. Yeah, I kind of echo that too. I mean, on the cash side of our coin portfolios and outside of futures, and we went all in long last week, so it's trying to take a pretty decent stand as far as an itchy trigger finger goes. Futures, we haven't quite take that same aggressive stance yet. I'd really like to see the intermediate term turn back up. So we just did a video in our live room, our live crypto room for our traders, and we talked about just in front of 8,000, the intermediate term pivots like 7690, 7700. If you get above there and then you start getting higher lows on the hourly and 4 hour, then I'm going to start getting more aggressive on futures. But right now, I nibbled a little bit, took some off. We've kind of got this near term setup right now on the futures. I just if you run a regression channel, bottom of the range is 6,500. This morning we poked our head above 6,800, and that was the top of the range, and then we backed right off. So that's kind of how I think you play the nearer term stuff. 6,500, we'll be looking to buy some stuff. You get closer to 6,800, and it seems crazy. It's only a 300 point difference, but BTC has just been so quiet. I mean, the ranges have really narrowed.
And I'm the same way. I'm looking for, maybe a couple hundred, or like, I shouldn't say a couple hundred, 6,500 or lower. I'll really be getting in if it happens to break out of, like, as it starts to approach 7,000. I have no problem buying something on the way up and,
Mm-hmm.
and riding that. But I just always keep in mind, where do I really think it's going to go? If 8,000 it starts to stall, I
Yeah.
maybe take some profits, and if it happens to make a run through there, then I get back involved. But I'm going to protect my assets, within this type
Yeah.
bandwidth of where we've been living. And I'm
Absolutely.
not hopeful that I feel like we're going to be in any sort of a breakout, but I need to, paying attention to what, where the bandwidths are, where the technicals, give you the signals to buy and sell, and trade aggressively in those moments.
Mm-hmm.
This range and these volumes will give me a lot of confidence to buy and hold. And I think active trading makes a lot of sense.
Yeah,
Yeah.
it's interesting when you think about like the market psychology and where we kind of are in that cycle of optimism and depression and whatever we are at. But I think it kind of shows where we're at in that cycle when we have news like we've had these last few weeks, and the price only moves a few hundred, if that. When months ago, back in 2017, it would have been thousands of dollar moves in a span of a half an hour. Just the interest, the volume, and it just isn't there right now.
Yeah. Well, that's a great point. It's not taking a lot more positive to move the market up, which from a sentiment perspective is not all that bullish just yet. What do you guys think on some of the other majors? I mean, we bought Ethereum pretty well last week, and we had a 10% move up. So
Yeah.
I punched a little out this morning. But other than that, I thought Ether. We were talking about futures, which seems to be on the margin. It seems like we're moving closer to them, CBOE or CME listing. So there's a lot of rumor right now, I guess, that it looks like Ethereum will be next year on the
Mm-hmm.
future side, which makes sense. So I don't know if that was the main driver of the pop or not, but the spread on a relative value basis, I mean, Ether just took off today. It's really widened out. So we use that to take advantage and just lighten up a little bit on what we thought last week.
Yeah.
What other news did you want to hit on?
I mean, I think the biggest thing since our last show, at least over the weekend, was Square got a bit license in New York, which, yeah, I know it doesn't seem like too big of a deal, but there's only been a few issued in the span of the last 9 years. So I think Square, the company itself, jumped after the shares jumped after they got the green light. But pretty much now they can trade Bitcoin in New York.
Yeah, I think that's big. What are your thoughts on that, Brennan?
I think it adds, I think it's, while the price point of Bitcoin, is in that doldrum kind of a period, it still shows confidence, within the general public. And when somebody gets, an approval like this to move business in a particular direction, there's obviously a massive following, and there's a lot of people that are still believers in it, which isn't represented in the actual Bitcoin price. But it just, I think it further credits, the general public loving what's going on with that, and wanting to have more accessibility and more optionality, and how they can use their coin.
Yeah, I think it's interesting too because unlike Robinhood here, you actually get to withdraw your Bitcoin you buy. It's a little bit different than what Robinhood is.
Well, because Square, they don't really have any charting, right? They're kind of like
Yeah, you just buy the asset.
a little bit. Yeah, so it'd be more like Coinbase's user
Yep.
interface. I mean, they had a little bit of charting on there.
Yeah, I'm surprised they don't have more, but I guess they keep their interface as simple as possible.
Sometimes I think that's better. You get too complicated with people, and you lose people.
Yeah. Um,
think
I'm
it's
just looking at this volume again since we were talking about it. We're so light compared to January, the first quarter, last quarter.
yeah, yeah, without a doubt. I think it's just time right now is when you really spend your time researching and trying to pick out some of the next winners over the long term. Who are going to be the major winners in the next run up.
Yeah. Well, that's good. And then what else do we have on the docket? We talked about features we weren't going to talk about. I think that's I think that's pretty obvious. It's coming.
Yeah, I think that the SEC statement kind of just paving that way forward.
Yeah.
Which I'd be curious what happens next after that launches. Bit license, Square. Who owns Square? Is it J.P. Morgan?
Well, I thought it was Dorsey's one of his groups.
I'm not too sure.
I'd have to look.
Yeah, yeah, it is Jack Dorsey. You're right.
Yeah.
Yeah, I'm kind of curious what happens after this. Now is who else is going to be allowed to start? I don't know. Does this set any sort of framework for more institutions to get involved, or was this just you think strictly from a retailer perspective important?
I mean, there's so many regulatory agencies. I mean, this is the New York State Department of Financial Services,
Yeah.
and they're talking about this is a virtual currency license, so that's pretty new. I mean, I don't know what that means. We saw some pretty, I think, fake news about Ether you couldn't trade futures on Ether because if it drops below a certain price, it wouldn't be $100 billion.
Yeah, I read that too. Yeah.
which is which is goofy, right? Brennan, it's like nobody cares about what's the total market cap of the hogs market. It's like they're caring about volumes, and yeah, prices are going to go down. Sometimes it might. No one really looks at an overall market like that. We never would price, never price soybeans like, well, the market cap of the soybean markets actually fell underneath you know, 30 million, so that's actually bearish. Like people are like, what are you talking about?
Yeah,
Talk to
I've
me
never
about the bushels, or talk to me about the supply.
exactly the demand for it. Nobody cares other than probably the ego of the companies involved and what their actual market cap is. I've never heard anybody buy or sell a stock based on the market cap. I think market cap is just a good tool to look at to see growth and who the top players are, and
Hmm.
gravitates people to if they don't know much about this company, then they'll probably do a little bit of homework on them. It's like, oh wow, you guys just made top 10, or you guys made whatever. But I don't think anyone's gonna I sure as hell wouldn't make any moves purely based on what your market cap is doing.
Yeah.
And again, I like to go back to when these things, I like to look at the volumes, I like to look at the technicals. I still need to do more homework on the management teams, in what they're doing. And I think it's even worth doing a background if you find a company that you're heavily invested in. Take a look at the board, take a look at the management team, and go back, a layer or two into their backgrounds, and what did those companies do, and how successful were they, and when was
Hmm.
this person's departure from that? If you can find any of those things on the web, that's good extra homework, I think, in times like this where the market's not giving you a lot to work with, so far as volatility. This is a great time frame to explore some of those things and develop a stronger sense of confidence, in your investments.
Yeah,
Uh,
and trying to figure out what catalysts are next too is always something I find interesting that I don't get a lot of time to do. I mean, just listening to, I always say his name wrong, Hoskisson, over there, Cardano's
mm-hmm.
uh, leader over
Charles, yeah.
there. I mean, when he breaks down just on like in his car, and he's just breaks and does a, a periscope or whatever. I mean, that's so valuable that he's talking about we're trying to get this done in the next 30 days. We're trying to get this done in the next 60 days. And that really, at least from a trading perspective too, it's like, all right, well, I think if we got our cycles coming out of here in August and September, and he's got major catalysts lined up for that same time frame, that really allows you to focus a little bit
It's
more at level.
interesting that you guys are talking about market cap because that's all anyone else looks at is market cap. I think it's something that's pretty wrong. I don't know what else people can really look at though if they're new to investing. if they want to build a portfolio, what other options do they have other than to look at the market cap and decide from there? I mean, what would you guys do if you're trying to build a portfolio from maybe a more traditional standpoint?
Yeah, if I'm new to the space and I'm taking, and I've been, let's say I don't have a Wall Street background and I've just been trading on my, E-Trade account
Mm-hmm.
forever, and you always you're always taught you need to have your backbone investment, the level of stability, and then whatever your risk parameters and appetite looks like, then you can start diving into the more highly volatile structures. So, if you're gonna, belong, some of the top banks, some of the top tech, and you're like, wow, I really feel like I've seen, crude oil, rise out of its doldrums over the last couple of years, and when you want to start, participating in some of the, the highly volatile, oil and gas companies,
Mm-hmm.
I would then say, okay, I'm comfortable with 20% being at high risk. I'm comfortable with 40%, 50%. And all generally it's age range too, right? Younger
Hmm.
guys and girls have a better opportunity to stomach more risk. My father, I would not encourage to take a truckload of risk. I would say protect your assets, and and have a smaller percentage than me in what you're willing to do. So what would I do if I were new to the crypto space and look at that? Well, maybe market cap would be something that we'd look at. I go, who are the behemoths, in the
Hmm.
space, and then kind of work backwards on it. But again, I could care less if their market cap rises or falls. But if I'm just going at it from an initial perspective and I don't know anything about them, I'm saying, all right, well, who are the biggest companies and what do they do? I would then also probably overlay those charts if I could, and try to see, which coin is the market leader, and which coins have secondary and tertiary moves off of, let's say, Bitcoin being, the leader.
Hmm.
Mm-hmm.
And how quickly do those guys, do those other coins move when the price of Bitcoin makes meaningful moves up or down? And I'd pay attention to that when I'm looking to build my portfolio, and what I think would be, and how I would say, okay, do I need to have, you know, Bitcoin, Ethereum, Litecoin, whatever, like hit the majors, BNB, and then do I want to go off and now play the Ripple game, right? Which has gotten smacked so hard, or
Mm-hmm.
what
Yeah.
what percentage do I think I want to have juice in, and pay attention to those things.
So, for like a starting point, if you're trying to create some sort of core holdings, something that
Yeah.
you feel more comfortable with, how big of a percentage would you say probably to start? If you, the average person, nothing over like 50, like we talked before, 60.
Yeah, and Jason, you may think a little bit differently, and again, I think it's purely up to the risk appetite of the individual. I'm 38 years old, and I still have a large risk appetite, but I have a larger risk appetite right now as I'm diving into a space and I'm spending more time in front of the screens and watching moves than I would be at 38 years old and not have a desk job, and I'm off a computer. I'm not paying attention to things. I don't have the apps where I'm putting a high level of focus on it. Then I would probably shrink it. But I would say
Hmm.
if I have a lower risk appetite like that, not a desk job, not looking at the daily moves, the hourly moves, I would probably be comfortable with, say, I don't know, a 30%, 20% risk appetite, as long as I like the idea of the company and what they're doing for my highly volatile trades. And if I'm watching it on a regular basis, that could probably creep to 40% pretty comfortably.
Mm-hmm.
Yeah.
And if I'm wrong, again, I love to preach, have an understanding of where you think this coin should go. And if you're wrong, your idea might be right. Be quick to take off your risk and watch the price go down. And then when it hits a stable level, it hits a floor, reinvest that money. Don't write it all the way down. Your idea might be right, but your timing might be off.
Yeah,
Mm-hmm.
that's so key right there, risk management. Um, yeah, those are no, I agree. Those are all good points. It's just it's tough to put everything into one box for people. I know we try to make it simple for people when they're getting into crypto because the learning curve is steep and there's so much stuff that's overwhelming.
Mm-hmm.
Whether you're just trying to figure out how the hell to buy this stuff and execute and where to go and the technology and blah blah blah. And wallets. But I think just generally, I think you kind of have to do it from a top down, right? So you look at your overall personal net worth and whether you have X amount into real estate. I mean, I try to think global macro and then try to move into, if I got a percentage of my assets in real estate, if a percentage in stocks, if a percentage is in bonds, you look at that portfolio, and I think crypto is another piece of that pie now.
Mm-hmm.
And then so when we're talking crypto portfolio, that assumes for me that okay, I'm long X amount of dollars, or I still like U.S. stocks, but if I'm in Asia right now and you're long the Asian equity market, or if your advisor has you long a bunch of China or a bunch of Europe, you're getting crushed right now on the equity side. So getting growth and inflation right on the global macro level matters for a lot of other asset classes. Doesn't Global macro doesn't really matter for crypto just yet, but it will.
Mm-hmm.
But then when we think about just our crypto portfolio, and if you kind of zoom in visually on that pie, I think all of Brennan's points, what's your age demographic? Um, what are your other assets? It's tough to say if I got X amount in at Schwab and all these other assets, then okay, I got a certain amount of money I want to play with crypto. Some people are just saying, I don't, maybe it's the millennial thing. I don't trust the stock market. They just only want to trade crypto.
Mm-hmm.
And for me, it's just not a well balanced investment philosophy because everything cycles. So you can just look at right now, the dollar has been the most momentous asset on the planet right now, or at least in the last 30, 60 days. And that's taken down oil, it's taken down gold, it's put pressure on emerging markets. So just saying, well, I only want to be in crypto, you're missing opportunities, but then you're also going to be sitting through times like we've had since February where the market's really underperformed and you've been making a lot of lower lows. So I would argue that you got to have a kind of a mixture. But then when we just talk about crypto, I think it's important to realize the cash. And so, yeah, your age, how your risk tolerance. If you're putting all your money into crypto, to me, that's pretty risky, right?
Yeah.
Because who knows what happens if regulatory this or that and the other? What
Mm-hmm.
happens if there's electronic issues? You're very tied to a lot of things that could go wrong that we take for granted. But then once you're happy with, okay, I got X amount that I'm going to put into crypto, then you can start talking about how to divide that portfolio up. And I think people that really struggle with is the amount of cash that they should have. And when the market's ripping, if you're long 30 names or 20 names or 5 names, it doesn't really matter and you're fully invested. But as soon as you experience these intermediate term bear markets, you start to realize, having some cash is really valuable because instead of buying one Bitcoin on the high, now I can buy 5 of them.
Yeah.
Yeah.
You know,
You know,
so
and
we try.
I
Go
think
ahead.
almost kind of additive too. I mean, so you broke it down in a more eloquent way in looking at your actual portfolio. Like, most everybody's wealth is held in their homes largely. Right?
Mm-hmm.
Real estate takes a massive percentage of your liquidity. And then people are looking at their IRAs and their stock accounts. I think you're right. Somebody jumping into a new space, and certainly not to tout, what we do or what you do. If you don't know what you're really doing, spend time with people who know what the hell they're doing.
Mm-hmm.
Spend
Mm-hmm.
time, log into your trading chat room. I mean, get an understanding of how risk metrics work. Jump in the trading chat room and hear what people are doing and pay attention that way. Learn from everyone else. And even if you are not an active participant in voicing your opinion, absorb what everybody's doing. Pay attention to what they're doing. Make notes as to where they said something and are they right or wrong. And that would be it's a great tool and guidance. And if you are uncomfortable in the space and don't really know how to maneuver it, I'd strongly encourage joining a group of people who are versed, who have risk metrics, risk parameters involved, who talk about this. And just like before the call, not to give too many details, but the one guy that the Regis was telling me about, who only had $1,000 and maybe you could borrow 500 in order to do something, didn't know that much about it as a college kid, and all of a sudden he joins your trading room and he starts paying attention to what you guys are doing and how you're doing it, and now is thousands, in the mid $60,000 range, and that guy has made a killer performance that would. It's super
Hmm.
Yeah.
impressive. So I think it's when you're assessing your risk parameters and how you want to engage your cash, when you jump into a new space that you may not know enough about, join a group, join the trading chat room, be a part of something where people are saying things that are above your current comfort levels, and learn from them.
Yeah.
Hmm.
Yeah, I think as a general rule of thumb, if you're talking specifically crypto investing, I think you really got to just invest and trade what you understand. If you haven't researched the latest advancements in technology, just don't allocate capital towards these new projects and ICOs. Unless you're going to follow the technology. And I think it kind of goes for a lot of people, unless you even know the basic consensus algorithms, proof of work, proof of stake, delegated proof of stake, proof of authority, all these different ones. If you don't understand all those, you should probably just have some Bitcoin. That's about it.
Yeah.
Bitcoin should easily be your largest position. If that's 60,
Yeah.
70, 80%. But if you can't differentiate what makes the the basic fundamental level of all these currencies different, you probably shouldn't know anything else besides Bitcoin. That's kind of
Yeah,
my
stay lean.
philosophy when I look at that.
Stay
Hmm.
lean. Don't get into too many things that are going to be too confusing with you. Pick a couple of pick a major, pick a small handful of the majors, and work on those things. But I would obviously strongly encourage you getting, being a part of a greater knowledge, like the trading chat room that you
Yeah.
guys have, that would really bring you up to speed. I mean, if I didn't know anything about a stock, or let's say I know little about Square, which is true when it comes to the fundamentals of the company, and what the pipeline looks like, and what their competitors look like. First thing I would do would be to call my old guys and see if I could get a research report and see what the analysts are saying about it, so that I could take my understanding of the company, see what the professionals are talking about, and then make my own decision based on what if I think they're right or wrong.
Yeah.
Yeah.
I think that's something big. I think because cryptocurrencies, everything's online and digital. So all the conversation is happening online in these communities. And I think people just don't branch out of their comfort zone and try to find different communities to be part of. So they'll pick an investment, for instance, they'll stick to that community and will never branch out to anything else. If that's Reddit, Telegram, Facebook, Twitter, trading groups, chat rooms, whatever it is, people just don't really try to engage with anyone else outside their community. Some of these coins become just pure echo chambers, and I think that's why we saw Ripple, for instance, go up to $3.
Yeah.
They don't branch out. They don't ask what proof of work, proof of stake, all these different consensus algorithms. What makes everything unique? What makes Ripple unique?
And
You
there's
know,
then there's just a lot of chasing in the space. It tends to anchor on two or three things. Whatever is moving, it all kind of
think
the
so.
crowd kind of moves back and forth between some of the stuff that's in the major headlines. I mean, I think there's so much you could talk about on the portfolio.
Mm-hmm.
I think one of the things that bothers me that some of these, I don't know if people are out there in the space that kind of have some followings on YouTube and stuff. They they try to be sensationalist about only Bitcoin is going to be the coin to survive, or somebody's got an opinion about this particular new and upcoming blockchain that's going to destroy all the others. And it's kind of like, I don't know how that helps anybody in the space because nobody knows what's going to be the next dominant one, two, three, four blockchains 40 years from now. And so the better approach is say, well, I don't know it all, and I don't need to have an ego about it's going to be only Bitcoin and everything else goes to zero, or it's only going to be EOS and everything else is whatever.
Hmm.
It's better to say, all right, I don't need to pick one horse. I'm going to have five, but then I'm going to go ahead and give my capital. I try to have a mindset like I treated my stocks or my bonds or my position like those are my employees. So if they're not performing, I'm not giving it any more of my hard-earned capital. I'm not giving it any more of my time or focus. But the positions that are performing well, okay, you got my attention. I'll give you more capital if the trend starts to break out here, or if it's like Brennan, you were saying, if the volume is there. All the things that we look for, I don't have to be. I can have a really bullish opinion about a Cardano, and I can have a really bullish opinion about Ethereum. I can have a really bullish opinion about, some blockchain we haven't heard of before. But from a timing perspective, there's a time to be more allocated toward Bitcoin. There's a time where it makes more sense to be in a little bit more Litecoin. There's a time
Yes.
for all this stuff. But just to make it simple for people, it's like I think there's times where you want to have probably 20 to 30% cash at least almost at all times in your crypto portfolio because the volatility is so wide and so much of it, you're going to get a lot of opportunities to buy the names you like instead of just piling in and being all in and hoping that the price doesn't keep going lower. You got to kind of learn to trade it around a little bit. It's going to help. You can add to your portfolio over a certain amount of names. The only other thing I'll say on that too is that people, when you focus on the cash piece of your portfolio pie, then you won't be too aggressive about getting long 50 names because I would rather be in maybe 10 names and have some cash that I can manage my position and I can buy more when it's down 25%, it rallies, I can take some off and I can get in and out and make more money on less names by focusing my cash in those projects because you only have so much capital. If you just if you take your cash and you never worry about the cash portion of your portfolio and you hear about this coin and then you buy some, and then you hear about this coin and you buy some. What ends up happening is you spread your capital over so many names that you end up just being basically long the market and you're just, you don't have any opportunities when something really goes on sale. Um, anyway, there's so much to talk about on the
No, I
portfolio.
mean that makes sense because we have people come to us and I had a guy the other day says, "Well, what do I do now? I have was it like 150,000 USD in Ripple, and it's down 60% of my position." What do you mean? You have like 95% of your position in one coin, let alone Ripple.
Yeah,
No cash, no diversification, even though there's not much diversification even possible.
yeah,
But I mean, yeah, like you were saying, no cash position. So they were all in at Ripple at that specific price, but they wanted to
yeah,
trade it.
To write a name down that large is ridiculous.
Yep.
And it also just argues again to be, some people, well, everybody, me included, I've married an idea before and I have doubled down and tripled down and I think I'm right. And then all of a sudden the pain gets to be so intense. It just freezes you and you're unable to make decisions because you're emotionally invested in a particular idea that's just going wrong. And, again, I always encourage like have a stop loss. I will only allow myself to lose 15% before I will liquidate, walk away,
yeah,
reassess, reevaluate, because now you don't feel the pain like you do if you still have something involved in it. And and
yeah,
and again, sometimes again, going back to the trading room, being part of a group where people are talking about certain things and might help give you the confidence to make that sell, when you're in the hole and ride and not ride it out. And I've won huge on some of those bets, but I had sleepless nights, and I've lost huge on some of those bets too. And
yeah,
I don't ever encourage, the double down's great. The triple and quadruple down generally a bad idea. I may have
Yeah.
the right, I may have the right philosophy, but my timing is off, and
hmm
it's hard to walk away from something when you're all in.
yeah. That's so true. I mean, when you say it's paralyzing, it is. I mean, you've probably been there too, Brennan. It's like you got 200 million whatever on, and then all of a sudden your screens goes down, and it's maybe for 20 seconds, and it comes back, and you're like, oh, that's 60 grand a tick. Okay, that's 8 ticks down in your face, and then you're like calling to your guy in the back office. How many long? Jason, you're long nine. Okay, 2 seconds there. Wait, how many am I long? I just bought one. Like nine, you were long nine. Now you're long one. It's 10, Jason. Okay, you can't even do simple math. And from a directional standpoint, once trading is probably 90% psychology, and when you do commit and you have a big position on like that, or you convince yourself that you're right and you have X amount of scenario building going on, you're really just blocking out so much information that the market's telling you. And
Yeah.
anyway, that's just stuff we work on in the trading room a lot.
Yeah.
Well, those are great topics as far as portfolio building. We try to show some visuals in the room too. I think it's helpful for people to see, like, oh, okay, you guys took your cash position down to basically zero. You're pretty aggressive down at this point. Oh, okay. You go on a rally. There's some visuals like that I wanted to work on.
Yeah. Well, do you want to run through a few of the majors, maybe some picks, since we're talking about building a portfolio and trading it?
What looked good to us this week, we already kind of pulled the trigger on. So we bought salt down here. I think is stupid cheap. Cardano was really back to really good levels, 15, 16 cents. We bought Monero pretty much on the lows. And so kind of where the market's been right now, it's if we move higher from here, it's going to be more of us coming out of stuff instead of chasing.
Yeah.
And then we'll look to try to add that back on the next hourly and 4-hour dips. That's kind of how I don't see a whole lot of opportunity to do right here, right now.
Mm-hmm.
I thought Bitcoin Cash looked pretty cheap on a relative value basis. So when we say relative value, that's just a term in trading and finance. It could be across different markets, but a lot of times in fixed income, which is what I traded for 10 years, is I'm buying these bonds or I'm buying this duration of this particular bond because they look cheap relative to the front month or treasuries bonds. And so there's those little dislocations, and you can do the same thing in crypto. So when we look at, there's different ways to chart it, but Bitcoin Cash, Ethereum, Litecoin, Bitcoin, and if you consider those the majors, and when you look at them like versus BTC or just stack them against each other, Litecoin's still pretty cheap. Bitcoin Cash is pretty cheap. And like I said at the top of the show, Ethereum pretty rich. They're expensive. Did you guys make any other moves this week on your own stuff?
Yeah, I was buying kind of across the board. Bought a little more basic attention token, Civic, Nano too. I don't know how far it's gonna go from a technology standpoint. It's it's not proof of work, but it's interesting project that they're really trying to push adoption with instant transactions, free transactions, which I think in the short term is going to catch on pretty easily if that's what's going to end up happening long term, because Lightning Network for Bitcoin's still a way off. I know it's on live, but before that actually takes off, there's some room for other projects to get some spotlight.
So they have a window just because their transactions
I think so. While
cheaper,
Bitcoin and Ethereum are starting to ramp up, the medium of exchange aspect, not just the store value. But I think projects like that are going to have a spotlight from a trading standpoint. I'm not very big. I'm heavily Bitcoin, but something like that, basic attention token too. They just released some pretty good incentive programs for downloading Brave. Do you guys use Brave, the browser?
I use it on the mobile, and I have it on my desktop. I just haven't really
dove into it. Well, they're doing some pretty good incentive things where you get some actually decent amount of BAT for using it. But
have you? So you've been doing that, and you received it?
Yeah, I mean it's just a few BAT here and there, but that's got to be great from a network building standpoint. And stuff like that, that's just going to, as more people are more comfortable using that, for instance, they get more comfortable using crypto in general,
No, for sure.
They see that as money then. And then you have like Enigma too, kind of interesting things being released. But really just been following the developments of Bitcoin too, the Lightning Network, such exciting things happening. Mm-hmm. Some actually pretty successful dApps too, some applications for Lightning already.
Oh man, that's a whole nother podcast.
Oh, I know. Yeah, we'll probably get Noah on this week. Hopefully, our Bitcoin developer. We can talk a little bit more about what he's excited about.
Yeah, let's do that Thursday for sure.
Yeah.
Well, on that note, I guess we could wrap it up. I'll just let the audience know a couple things we have going on. So, Blockage Capital, blockagecapital.com is our digital asset management company. where you hear about this chat, the crypto trading room that we
Well, you
have,
can
all
actually,
these chat rooms.
yeah, you can actually go to Block Edge Capital, and there's a education tab that'll
Okay, good.
bring you to everything.
So we had some of the easiest places to kind of opt in used to be under our education company, which is Jenkins Risk Management. But this is good. So yeah, so guys, blockedgecapital.com. We'll start driving some more traffic there. Be putting some of our blogs and some of our contributors putting stuff there. The podcast should be there. Um, we also have I don't mention it that much, but Rhythm, our trading platform, and currently that project we're working on is Rhythm.network.
Yeah.
I can't say too much publicly about it. If if anyone is interested on what we're doing there, we can have some conversations privately. But we've got a lot of exciting things. Brennan's kind of heading up the institutional side of that. But good. So the blockedgecapital.com. Follow us on YouTube.
Really follow us on Twitter. Me and Jason
Twitter.
here. Brennan, you still got to get a Twitter, but at the Jason Jenkins for you, Jason, and Alec Jupsney's here. They're both in the description, but we don't always get these podcasts out exactly when we need to. So just follow us, and you'll get whatever we come out with.
Join the chat. That's pretty much all I have. Brennan, you got anything else?
No, not much. Hopefully by the time we have Noah on, I've got a call with one of the major investment banks tomorrow to see what efforts. They're very curious. As I just changed my LinkedIn to Block Edge Capital, I got inundated with a lot of my old relationships. With what are you doing? What is this company? How does it work? And one of them was a managing director of the Prime Brokerage Services, which obviously helps build out funds for people, massive asset that those guys have. And I just quickly asked him, just to see what his response would be. Are you guys involved, in the space? And he just replied back, we are. He goes, let's have a talk Wednesday. I said, cool. So we're going to have a call. So it'll be interesting to see what some of the big boys are doing. Hopefully he can talk freely about what they're up to, and it'll give us a good gauge, because again, as institutional players get involved, I'm excited about it from a variety of standpoints. So hopefully I'll have more to talk about on that.
Yeah, I'd be interested to hear, because everyone's speculating it. It's almost like a meme at this point where, institutions are coming in. All right, well, you guys said that last year. Now we're down 80%. Are the institutions in yet?
They got a lot of regulatory hoops they got to jump through.
Yeah, exactly. People don't realize it's a slow process. Just because you see a headline doesn't mean they're actually buying this stuff up, by the truckload right now.
No, but they see how much money's involved in it, and that's their game. They want to figure out how they can how they can be a part of it, and they want to get a slice of the pie. And I cannot wait for them to get in the game. It's going to be beneficial for everyone.
Yeah,
it's going to be exciting. All right, guys. Well, good show. We'll get into more of that Thursday for sure, and then hopefully we'll have Noah on.
All right. Till next time, guys.
Have a good one.